that you concentrate on, but then the pairs that you pick to concentrate on would depend on the time that you're going to be trading, because as much as you might trade all day or even at night also, there are times when it's better to trade, and there are times when it's not better to trade. For example, if you were to trade let's say late New York session, those are not the best time. Those are not the best times to trade. Sometimes they might trend, but most times they might not trend. So when I say trend, right, this is when you see markets doing this. So this is a healthy trend. So this is what we call a healthy trend, right? So when markets are when markets are actually moving in a direction, either up or down, and then we also have a range or consolidation. So when price is doing something, like this, do you see this area right here?
Yeah.
Right. So this it's something that we can call a range or a consolidation when it's moving sideways. So it's not really giving us a direction, it's just moving sideways. So it might create 2 points, for example, like this. It can be big, so it can go up, down, and then up, down. So as long as it doesn't break the high or the low, so the high will be our resistance and the low will be our support. For as long as it doesn't break those two areas, right, price is consolidating. So whatever you read, whatever you read told you that whenever you see a consolidation, it's not the best time to trade, right? Of course, it's not the best time to enter your trade, right? But keep this in mind as you learn. Every time you see a range or a consolidation, that's actually the best time to look for a trade, because every time market ranges the way it did here, right, price is it's waiting for a breakout. So it will range for quite some time, right? The bigger the range or the longer it takes, the bigger the breakout. So if you see a range that will take as long as this one that did, right, we should see price moving down lower. It should push lower, because this range actually took somewhat of a long time, meaning when price moves lower, since it's breaking out at the bottom, it should continue lower. So if it breaks out at the bottom, it will continue lower. If it breaks out at the top, it will continue higher. So every time you get a wave, if you get a wave like this, you will get a range or a retracement. This would be a retracement. You see this price going down right here.
Yeah.
Then you get another impulse. So a trend, this would call it an impulse. So every time you look at the charts, right, you are looking for an impulse, retracement, or range, and then another impulse. So when price gives you the first impulse, right, it's telling you where price is going to go. And then if it retraces or if it ranges, then it's telling you that price is most likely going to continue higher. So that's when you wait for the breakout so that you can enter your trade and then continue with the trend. So some people would try catching their trades. Let's say if price was to continue higher, where price is it right now, right? Some people would try to enter buys at the bottom of the range. So this would give them lower risk and a great entry. You know how like people like showing off great entries, like really nice entries. So that's what they would get. That's why some people would prefer entering at the base. But then this is risky because you might have entered around here, right? And then price came all the way up here, right? And then you're happy that price is going in your direction, but then it actually ends up breaking at the bottom like it did right now, right? So if you see a range or a retracement, right, it's better to mark the high and the low. So when this price started creating, right, you would have marked your low right here, right? And then you would have marked your high, let's say here, right? And then you have to wait for price to come in close above or close below for you to know where the direction is going to go.
Right.
Yes. Do you have any questions so far?
Just one question,
Yes.
because I've been starting to look at the newer market, so Bitcoin.
Yes.
and I'm really excited. Like I'm really interested in that. So I was looking at it, and I wanted to focus more on Bitcoin, and I wanted to ask if it's a big difference from the technical analysis aspect.
So
Or
it's not a big difference, right? The things that you would actually learn in forex trading and stuff that you would use for Bitcoin. It's only that with forex, right, there is more things that are happening, so you might get more trades better than when you're trading Bitcoin. Because if we go on Bitcoin right now, right, it's a slower market, and as much as it is fun to trade, it's not the best because you have to wait for longer. You know,
right.
yeah, you
Yeah,
have to.
but that's what like. I'm patient. Like I want it slower. You know.
You want it slow, but then,
Yeah.
all right. So this is Bitcoin, right? This is the chart for Bitcoin, right?
Okay.
So
Perfect.
everything that you would learn on currencies, right, is the same way that you would use on Bitcoin. But then
Got you.
the only thing is with Bitcoin, right, you're gonna have to be ready because this thing is an uptrend, right? It's only in an uptrend. So as much as price might go down, it's still in an uptrend. So
Got you.
this is our Bitcoin chart, right? Wait, sorry, I changed it. All right. So this is our Bitcoin chart, right? You see the trend. So the trend is going up, right? So as much as
Right.
price went down here or here or here, price is going up, right? And then price
Yeah.
came all the way up here, right? And then it made a high right here, right? So when you're trading, right, we always have to mark our high and our low, because for price to continue
Yeah.
going into a certain direction, it has to break a high or a low. And when price breaks that high or a low, that's when we catch a trade. So let's say, for example, right now price is being in an uptrend, right, and then now it created a high. So this was the highest price it reached, right, and then it dropped all the way to this low, and so that means it created a low right here.
Yeah.
It created a low right here, right? So for price to continue in an uptrend, it has to break this high, right? And for price to continue lower, it has to break this low. But if this candle, right, continues lower, or another candle continues lower, and price ends up closing around this area, right, then we would say price has created another high. So this is how you see people who have many lines on their chart. So that would be our support and resistance. So right now we have resistance, and support, right? So if price rejects this lower price, right, and then comes back and closes above our high right here, right, you can actually enter a trade aiming for price to push higher to our previous high. So that's how you catch a
Yeah.
trade. That's how you catch a nice trade. But if price is going lower, right, then you want it to push lower and break this low. The moment it closes below this support we have right here, then you can actually take a trade expecting price maybe to go to this low next. And this is a very nice trade, because if you look to our left, we have clean traffic. This is called clean traffic. I
What
call
does
it.
that mean?
So clean traffic is when you have a healthy trend, or when you have healthy candles. So let me clear this. So we have these candles, right? You see these candles? These are big candles. These are big bullish candles, right? That's good clean
Mhm.
traffic, because they are healthy, they are big, they are showing buying pressure in the direction of the trend. They are good candles. But then if you look at candles like these ones, these are tiny candles, right? They might be pushing in the direction of the trend, but then they are not showing as much buyers as they need to have. So that shows that the trend is weakening. And if you are getting very tiny candles, very small candles, right, a reversal might happen at any time. So it's dangerous to be in a market with tiny candles like that. If
Got you.
you Yeah, if you had entered maybe somewhere around here, right, you can hold through these tiny candles, because your stop loss might have been in break even, or it's in profit, your trade is protected, and you might have secured some profit, so it would be fine. But Wait, you have a question?
No.
All right. So, but if you see, let's say you haven't entered, right, and then you wake up and then you come on the market and price is right here, right, and then you see these tiny candles, it's best to wait until something with pressure shows up, something with high volume shows up, then you can enter, because it's better to be not to be in a trade than to be stuck in a trade, because you don't know how
Yeah.
yeah, you don't know how long it's going to range, or how long it's going to retrace back. So you always have to
Right.
wait. Yeah, you always have to wait. So,
Yeah, that makes
um,
sense.
when you're studying, right, they tell you that support and resistance you identify it by using let's say previous price action, right? They tell you to look to your left, and then you have to use the areas that were most touched, where the most wicks are, right? That would be your support and resistance, right? To some
Yeah.
extent, that's true. You can use that, because for us to know our target, we did look to our left to say price might come and end at this low, right?
Mhm.
However, if you want to be how can I say it, I can't really say a good trader, because I can't say other people are bad traders. Let's just say, if you want to move along with the markets, right,
Yeah.
you have to understand that support and resistance is actually created as price is being printed. So in these instances, right, if you come on the chart early in the morning, let's say today you're trading, right, it's better to clear all of the support and resistance, or any analysis that you had the previous day, and
Yeah.
then you draw the new ones that are being presented by the markets today. So if we were coming on our charts right now, right, this is what we have. We draw support and resistance according to what the market have told us, something that's close to the market right now. I don't want to be drawing support and resistance on the daily time frame when I'm trading on the 1 hour time frame, if you get what I mean.
Yeah.
Because
Absolutely.
you're going to end up reacting to the zones that are not for that time frame, or that are not valid at that moment. So
Yeah.
if you're trading on lower time frames, it's always best to concentrate on the time frame that you're trading. So
Yeah.
right now we're on the 4 hour time frame. So we've opened our chart. So if we're plotting our support and resistance, right, we would plot the high price recently gave us, right, the high it
Hmm.
gave, and then the low, and then we also have this high that it created, and to some extent this is also a high, because price did go low and then it came all the way up. That creates a high for us. So
Yeah.
those are the support and resistance that would have, and those are the ones that you would use to determine where your next trade is. Because if we have this, right, and then price is at is at this way, price is it, right, what you're waiting
Hmm.
for is for price to close above your resistance. The moment it closes
Yeah.
above the resistance, you're entering for a buy. If it closes below your support, you're entering for a sell. So
Yeah.
you don't really have to do much. You just need to know where price is at, where you're expecting to go after it breaks your levels, and you have to wait. That's it. So
That's it.
it's not really complicated.
Right.
Yes.
Then why do
So,
people make it so complicated?
well, because if things are simple, you're always going to be wondering, what can I do to improve it? And the more you wonder on what you can do to improve it, you're going to be adding more stuff,
Yeah. Yeah.
trend
Yeah.
lines. You want too many confirmations. Right now, I can tell you, I can look for 3 confirmations without any indicators, and people would want indicators to just have 3 confirmations on their trade.
Right.
But right now we're going to be using the support and resistance, right? Support and resistance is the same as saying zones in general, or supply and demand, or pivot points. It's all the same. But
Yeah.
people want to make them they want to put them on each category,
Hmm.
when it's all just one thing. That's how people complicate it. So
Yeah.
so they're going to plot support and resistance, right? They're going to plot supply and demand. They're going to plot pivot points, of which it's all the same thing. You only have to understand the area where price is at,
Yeah.
in the candlesticks that are forming in that area. Because for
Yeah.
price to show you that it is a healthy trend that's going on, right, you need to see these big candles, these are healthy candles like we're talking about, right?
Yeah.
And then if you start seeing small candles like we discussed earlier, like these ones, then you should know it's time to wait. The price is not going to give me anything solid at this moment. So you
Yeah.
would have plotted maybe your support right here, right? And then
Mm-hmm.
price did whatever it did, gave you a high, and then it came. Let me clear this. So you would have plotted your support right here, right? And then price
Mm-hmm.
came all the way, and then it gave you your high. When this candle came back and closed below, you see this red candle,
Yeah.
it closed below our support. That was our indication that the trend is gonna continue lower. And then we get this one big candle. This one
Yeah.
big candle, if we were to go on the 1 minute time frame, maybe it even happened within 2 minutes or 5 minutes. So you can actually wait for a trade for days or for hours, like I have done it, and the trade completes in like 2 seconds. That's how trading
Well,
goes.
okay.
Yeah, so that's what I'm saying. You don't necessarily have to be in the market 24/7. We just need to figure out a time that you know that you would be available at least almost every day. And
Yeah.
because we're going to do sessions in the future, we're going to do sessions where you can decide, okay, I will trade this and this and this. So
Mm-hmm.
in that time, that's when you plot your things, right? You set your alerts if you need to set your alerts, and then you just wait for price to break and retest. That's it.
Yeah.
Yeah, so
Exactly.
that's literally it. So what we need to what I want you to master is your support and resistance and your candlesticks, because those are
Yeah, exactly. That's what I want to master. So that's what basically
yes. So
we
that's
can like we can do this like 3 times a week till I'm busy, you know.
yes. Did were you practicing on support and resistance on your own?
Yeah, yeah, sure. I practice them with I'm drawing like boxes.
All right, you're drawing boxes.
Yeah, yeah, like boxes and
Would that be
just
your consolidations? Your boxes.
no. So I'm drawing like red boxes for a sell zone when people are selling,
Oh,
and then
I get what you mean. I
yeah,
get what you mean. So what you need to do, right, is so if we can't really analyze on the Bitcoin chart, because whatever it does is always going to push higher. So there's always
yeah,
going to be lows and highs. So it doesn't have as much information that would be fun to learn with.
right,
Yeah, so we'll go back to the currencies for now,
yeah,
so that we can practice and learn. So the information
sure,
that we
yeah,
learn from there, we'll use it on the Bitcoin.
great, yeah, that makes sense.
All right, so I'm gonna put Euro USD. All right, so this is our Euro USD chart, right? So
Mhm.
if I'm plotting zones, there's always I have a few rules that I follow. So
Okay,
people always say you need to look at the monthly time frame. You don't necessarily have to look at the monthly time frame every single time. Look at the monthly time frame at the beginning of the month, right? That's it. So when you look at the monthly time frame at the beginning of the month, that's when you highlight the areas that are very important, right? And you only need to highlight the areas that are close to price. You can't be highlighting an area that's around this area, because price is still very far. It will take it maybe a year to get there. That's why
yeah,
people's charts always have too many things going on. You need to highlight things that you might use today or tomorrow.
okay,
Yes, so right now we would only highlight this high, because since price is pushing higher, we will need to know where it has to retrace from, it has to reject, because price doesn't move
yeah,
in a straight line. So we'd highlight this high because price is pushing higher, and this is the nearest high that price might hit. And then you wanna highlight your low. So we'd put this low, because this is the low. Price needs to break for this small bullish trend happening right now to reverse. If price breaks this low, then price is reversed, because remember, oh wait, you don't know this. You understand more when we do Elliott waves, but price cannot break the low of an impulse or the high of an impulse for it to continue in the actual direction. If it breaks the high or the low of that trend that's happening, then price is reversed. It has
Okay.
to, so there are some price levels in a trend that needs to be respected for price to continue going higher, because this is what actually happening when you see a trend. So when you see a chart like this, right, we have a low right here. I'm gonna put a low right here, right? So
Mhm.
when price reached here, right, this is what actually happened. When price reached this low, this is a strong bearish candle. If you look at this candle, this is a weak bearish candle. This is a strong bearish candle. So this candle is there to trick retail traders, people like us, to tell us that price is gonna go lower. Because when we see strong candles, we're expecting price to push lower, right? But then remember, we said we always have to wait for price to close below the
Right.
high or the low, right? But this price, this next candle rejected, see, it rejected the low. It refused to close anywhere below the closing of the previous candle, and it actually made a high, right? So this is what happened. They pushed price lower with the strong bearish candles to tell retail traders that price is going lower. So a lot of people sold off at this low, right? So
Uh-huh.
for price to actually go higher, they need to have enough sellers in the market for them to buy, for them to place their buy orders and price to actually go higher. A lot of retail traders need to be selling. They can't buy certain let's say they can't buy 1 billion orders if they don't have 1 billion sellers. So
Right.
that's why we have price consolidating. So they placed their first big order, right? And then price came to make a high right here, right? So if price refuses to break this law, that means price is established a law. So price will come, right, create the high of the range or the consolidation, then come back to the previous law, to our law. They place more orders, right? Price comes back to our resistance of the consolidation, right? So when it comes to the resistance, right, they're actually taking a little bit of their profits, right? So that price pushes back down to where they initially placed their first orders, right?
Yeah.
So that they can buy more,
Ah.
because they can't exactly place 1 billion orders at the same time, because that would destroy the market. Like for example,
Yeah.
what happened here, probably someone placed a 1 billion order, and then
Yeah.
we that's why we have this sell off, right? They can't necessarily do that. So
Okay.
they need to like buy, place a certain few orders, right? Price moves in that direction. So it moves in that direction because maybe they've bought for let's say they have 500,000 sellers, right? So they'll place an order for those sellers, right? When price pushes higher, people are going to buy right here, right? They take some of their profits, these people lose, right? That will make them want to sell even more. And we see, especially if we have these strong candles at the base of the consolidation, they're trying to trick more retail traders. But remember, we said for price to continue going lower, it has to close below the low. You see here, price didn't close below the low, right? That should tell you that sales are being invalidated right here, right? Price pushes higher, they take some of their profits, they push price lower, more people sell, and they keep on buying. As long as price rejects closing below the below or outside of our consolidation, right, price will keep pushing higher, and it actually did. So when you get this trend, right, you see how this trend is different from this one, even
Yeah.
this one, and even this one. You need a healthy trend. If we're getting a healthy reversal, right, you need a healthy trend to start like this. If you see a healthy trend starting like this, right, then something is happening. That's when you have situations like this where they're just waiting for more people to lose so that price can actually go higher. So
Got you.
that's how a consolidation is created.
Yeah.
All right. So I have explained that, right? So we have highlighted our high and our low. If price is to continue higher, this is the high that I need to be worried about. If price is to go lower, this is the low that I need to be worried about. So you only do this at the beginning of the month. If it so happens that in the middle of the month price does hit the zone that you have set up, then we can go to the monthly time frame and see what's going on. You can't be looking at the monthly time frame every day because it moves slowly, because everything is happening on the lower time frames. So would then move on to our weekly time frame. The weekly time frame is good to look at the beginning of each week, so that you know how your weekly candles closed, right? You highlight the opening of the new week. That's a very important price. That's all you need to do. So right now, all we need to do, right, is highlight, we'll use a line from here, is highlight this low right here. This is where price created its low. That's what we need to highlight, right? And then this is the beginning of this week. This is the low of this week. That's a very important low. And then we'll probably highlight this high. You can see how there's a range that's going on, right?
Yeah.
So price is ranging in between these two areas. So those are the only lines you would actually need on the weekly time frame. You don't need to plot your zones all over the chart. So from here we would go on to the daily time frame. The daily time frame is now tricky. The daily time frame, you can look at it at the end of the day, so that you know how the candle closed. People take this information lightly, but it's always good, because as much as you might understand and master the candlesticks that are printing on the 1 hour time frame, it's the same thing on the daily time frame, only that it's a bigger time frame. So it's just good to know, just in case if there are any reversal candles that are happening, or if it's showing you a strong trend, things like that. So you just check at the end. So you just check at the end of the day, okay, how did my charts end? How did my day end? You know your daily closing. That will give you some information for what to expect in the next day. You will see as time goes. Yeah, you will see as time goes on. So on the daily time frame, right, this is what I would do. I would just adjust the zones so that they are not cutting through candles. If your zones are cutting through candles, then they are most likely invalid, because price would do something very similar to previous price action. It would do something that's similar or that's exactly the same as previous price action. So remember when we mentioned clean traffic, you see this clean traffic, this big candle, right? Price did something very similar to that. So if price moved very nicely going down, right, if it rejects the low, right, and it's time for it to go up, right, if this was a nice bearish candle, right, probably going to get a nice bullish candle. That's why we don't draw our zones in the middle of the candles, because price is most likely going to pass through that zone. There is no rejection. Price didn't actually reject that price. So you always have to adjust your zones according to the time frame that you are looking at that moment. If we were still looking at the weekly, we would adjust it according to the weekly time frame. That brings us to, it's very important to stick to the time frame that you are trading. It's better not to change. It's better not to change through many time frames. Stick to the one that you're trading in, the one that's slower. So if you're trading on the 1 hour time frame, you can check the 30-minute so that you know what's coming. If you're trading the 4 hour, then the 1 hour, daily, 4 hour, weekly, daily, monthly, weekly. It's like that. So yeah, so on this is our daily. See that our daily looks well. The only thing that we would want to maybe add is this high right here, because if price breaks this high, right, price might react to this, but it's most likely going to pass that. This is a minor zone. The reason why I'm saying it's a minor zone is because price didn't take much time around that area. Because price came down, right, it made an impulse and then a range, and then it continued down. So it needed to make this range for it to continue lower. This is how they collect. This is how they accumulate the buy order, so that price can continue go lower. For you to win, someone else has to lose. That's what happens in the market. So maybe we'll place our high, and then the 4 hour time frame. This is probably where you are trading, or where you're looking to trade, right? So the 4 hour time frame, right, it's not as how can I say it? It's not that different to the daily time frame. it's not that different to the daily time frame, because this is the zones that we put on the daily time frame, right? And they look very fine on the 4-hour time frame. So you wouldn't exactly adjust as much, but you might add. Sometimes you do have to adjust, sometimes you don't have to adjust. But right now, this is perfect. And if you're trading on the 4-hour time frame, this is all you need. Because
Yeah.
price did break out of our range. This is our range, right? And then now
Mhm.
it's continuing lower. We have clean traffic to our left, so we would expect price to create something very similar to this candle. It might not be the same, but it will have something similar. It won't
Yeah.
it won't it won't find as much obstacles as, because this side didn't have as much. And then on the 1 hour time frame, this is where we end our analysis on the 1 hour time frame. Because if you are to do your analysis on the 30-minute time frame or on the 15-minute time frame, it's a very it's a small time frame, so there's a lot that's happening and you can't confuse yourself. So you always
Right.
end at the 1 hour time frame. The 30-minute time frame is somewhat fine, but those are minor. Those are minor zones. You need to have strong zones. Strong zones would start from 1 hour time frame. So this is what we have on a 1 hour time frame, right? So if you were looking at the 1 hour time frame, it's the same thing on the 4 hour time frame. You see this big candle, right?
Yeah.
This is the big candle that price closed, right? This is the candle that retested. You see this tiny candle, right? If this tiny candle it came and closed somewhere around this area as a bullish candle, then we wouldn't be looking to sell right now. Right now, you would be selling, expecting price to reach this low. But right, if price had closed with this bullish candle that's back in the range, you would not be selling, because price closed back in the range and it rejected price at this low that it created. So price has to break the low. This candle might be tiny, but it did close below. So
Right.
you would enter when this candle closed for price to push lower, and this is a very good, it's a very good trade. It is very low risk, because your stop loss would be at this high, the high of the previous candle. Because if price was to reject and then come back up, and then it reaches the high of the previous candle and even breaks the high of the previous candle, that's telling us that price it now has low chances of continuing lower. Price is reversing. So your stop loss, you have to use candlesticks. If you want a safe stop loss, you can use candlesticks. It's only that
Yeah.
you can't put a very tight stop loss sometimes when you have high volume that's happening, because high volume areas like this area, your stop loss might have been hit, but your trade is still correct, because they are looking to do that. That's the thing with stop losses. They are actually
Mhm.
looking for an area where most people have their stop losses, right? And then they will push price to that price so that people lose money, and then price will actually continue in the direction of the trend. So many people are actually correct about their analysis. It's just that they are not opening their trades at the right time, or they are over risking their trades, or they are putting their stop losses at the right price. So
Right.
being in the same doing the same moves that most retail traders are doing is what will actually break you in the markets,
Okay.
because that's the information they are using against us.
Hmm.
Yeah, so if people were expecting this to sell, they probably had their stop losses somewhere here, right?
Yeah.
They would actually try to push price above that high. That's when you see weeks that are long. You see a long week like this, and then the candle actually starts somewhere here. It's just that they had to drive price to that area where most people have their stop losses, hit their stop loss, and then price will continue in the direction of the trend.
Right.
Yeah, do you have any questions?
No, that's perfect. I like how you keep it simple.
Yeah, so this is what we do on our zones. Like, it's not that complicated, it's very simple.
Right.
You just have to know how to read price at that area.
Exactly. Yeah.
Yes, because if you see this high, right, you see how price was creating with very tiny candles right here, right? And then
Mm-hmm.
all of a sudden we had this big candle trying to push higher and breaking the high, right? So
Mm-hmm.
this candle actually looked like a strong bullish candle before it closed, right? A lot of people actually bought at this area. I can assure you that
Mm-hmm.
a lot of people bought at that area. And then price came to close back in this tiny range, back in the set. That's why I always advise for people to wait until the candle closes. You always have to wait for the candle to close so that you actually know where it's going. Because before it closes, right, they will do everything they can to take your stop loss or for someone to lose money.
Yeah.
So the candle closure, that's your final confirmation of what the candle is actually doing. It's always best to wait, even if the candle is making a huge break like this, right? It's always best to wait, because for price to actually go lower after creating a candle like this, right, it has to create an upper wick. This week, right? That will
Yeah.
push, that's the wick that will push price lower, because for that wick to be created, price has to correct, it has to make that correction for it to continue lower.
Mm-hmm. Okay.
So every time price pushes in a certain direction, it has to make a correction for it to actually push into that direction. Without that correction, price can't move in a straight line. At some point, it has to create a correction. So every time if you see a huge pump like this, right, and then you're thinking you've missed out, you haven't. Just wait for it to correct, right? When it
Mm-hmm.
corrects and it does something like this, right, and then you start seeing strong bullish candles like this. So
Mm-hmm.
this was the last bearish candle, right? The last bearish candle, right?
Mm-hmm.
And then this is the next bullish candle it created. I'm sorry about the color, but it's a bullish candle, right?
Okay.
And if you're looking at this bullish candle, right, it's actually bigger than any of these bullish candles that were created when price was trying to go down. So
Gotcha.
that should show you that price is reversing, right? So now you have the idea in your head. Now you just need a confirmation, right? You can either enter when price breaks the high of this candle, right? Because
Mm.
it is actually pushing higher. The moment it breaks the high, it's pushing higher. But to make it the best part, right, you would have seen maybe a candle closing above on the 30-minute time frame. That would be a confirmation, right?
Mm-hmm.
But if you're concentrating on the 1 hour time frame only, then the moment this candle closes, it closed above. You see how it closed as a strong bullish candle, and it closed above our previous high.
Yeah.
That's your confirmation that okay, price is high chances of continuing going higher.
Got you.
Yeah, so that would have been the early entry, right?
Yeah.
Then your next entry, if you want a much more safer entry, right, you would have plotted the high right here, right? Remember we said every time you come on the charts you have to plot your high, like you have to plot
Mm-hmm.
you have to plot your recent zones. So you would have plotted your high right here, right? So all you're doing is you had your signal right here, you had your first confirmation, and when price breaks above, this would have been your third confirmation, right, to even
Yeah.
enter with safe entries. And then let me clear everything. So we said you would have plotted your high around here, right? And then this candle
Yeah.
closed above as your confirmation, right? Since this
Mm-hmm.
candle didn't go far, price still had to correct for it to continue going higher, right? You would have placed maybe your stop loss a few pips below your confirmation candle, right? Do you see how price tried going lower, but it did not break, it did not close anywhere below the low,
Yeah.
the
Mm-hmm.
low of our confirmation candle? That's
Yeah.
giving us more confirmation that price will go higher. And when this candle when this bullish candle prints out, right,
Mm-hmm.
you can even add more positions, because
Got you.
you have too many confirmations now. The only thing you can do
Yeah.
is to actually enter the trades.
Got you.
Yeah,
Wow.
so that it's pretty much simple. So every time
Yeah.
you see, at least if you see two, at least three strong candles in the direction of the trend, right, wait for the retracement. Just
Right.
three.
Yeah.
Just if you see three, If you see three strong candles in the direction of the trend, it's better to wait, because price could push in the direction of the trend in that moment, right? Maybe give you another candle or even two more candles, right? But it's going to retrace. It's not going to continue in that direction for too long. It's going to have to retrace. It's going to
Yeah.
have to retrace for it to continue going higher. So all you have to do is to wait for that retrace.
Got you.
Yeah. So pretty much simple.
Yeah, that was very good. So I definitely,
Do you
I
have any,
definitely want to.
do you have any questions?
I definitely want to master this,
Yeah.
so we can just focus on this the entire time until it's perfect. Because I like that concept. It was very good.
Thank you.
Um,
So I think
yeah,
what we can do, right, is we could end the session here, right?
yeah,
And then you have to draw me some zones every day. Like you just pick a pair and you just plot your zones, what you think, and then you just tell me what you think is going to happen. So this will like build your confidence with your zones,
right,
and with time it becomes easier to notice. Like for me, I can literally come on the chart, not even plot any zones, but still be able to notice a trade, because
right.
I've been doing it for so long that I now
So
just see
long.
the I just see the areas without having to plot it.
Exactly.
So
Yeah.
at least plotting at least one chart a day, because I actually still do that. I at least analyze a chart each day. So just
Got you.
analyzing one chart a day, and then you just send it to me. We discuss a little bit. Even if you're not doing a session, that's fine, because it will help you master it in the long run.
Got you. But I do want to. I don't know. Like you seem pretty. You have other students as well. So how's your timetable?
Um,
Um, because I
best
want
ca-
to
best
have like
cal
fixed
um
dates,
you have
three fixed
fixed
dates.
you have fixed dates.
Hmm.
No, that's totally fine, because what I do is I have people all over the world, right? So
Right.
I have some people who I can work with at a certain time, so they send me like their monthly schedule, and then I just schedule my time into that, um um putting everyone and seeing how it would all work out.
Got you.
And then
Okay.
for those who can't actually join, right, then I just do them on their own times when they're actually available.
Got you.
Yeah.
Okay.
Yeah.
Perfect. Yeah. So we can do maybe you have 3 days in mind because I'm pretty flexible too.
All right, that's good. I don't mind that.
Okay.
All right, so I think that's all for today.
Yeah. Perfect.
I hope you enjoyed.
Yeah. Very much. Thank you.
All right,
It was
enjoy the
great.
rest of your day.
You too. Just send me like time slots when you're available.
All right, sure, I will.
Plan the next session. Okay. Perfect.
All right, I'll see you. I'll talk
All
to you.
right. See. Yeah. Thank you.